Hey guys, welcome to another webinar. And this webinar is actually quite late. This is probably one of the latest webinars I've ever done, primarily because I've been extremely busy with business and other stuff. And I just thought I had to do this video for everyone that still watches and everyone that really want to know what's happening in the market. Now, if this is your first time here, welcome to the team. And keep in mind, this is primarily for educational purposes only. I'm not saying, you should follow what I'm saying right here. I'm just showing you this is my own personal outlook for the market. So more disclaimers in the description. So what I'm looking at now is S&P 500, right? And for what I can see at this moment in time, S&P 500 isn't right for any assessment. But if you look at S&P 500 on the COT report, you will see that they added 1,828 new positions going long. Now, if you look at 1,828 compared to 1,410,615, you can see that the percentage ratio is quite low, right? And because of that, I would really recommend going into this asset because if you really look at what's going on over time, over a long time period on the COT report, we can see that since 2023, around this period, there was a boost in commercial buying and there's an inverse in non-commercials. And where we are right now, this movement from here to here is very tiny compared to all this movement that's been happening. So because of that, I wouldn't even touch this asset. And if you look further into it, in regards to the seasonality, today is the 12th of August, right? So if we go to seasonality and we go to August 12th, yeah, around here, let me zoom in a little bit. So around here, what you can see is this is saying we should go short, but it's not really, it's like a consolidation region. So I wouldn't really touch that. So we can look at other assets like let's say NASDAQ, for example. Let's see what NASDAQ is saying. They can see 5,000 position going short, and you still have 300 going north. So I won't touch that. You know, us, we like it to be in the same direction. So let's look at Dow Jones. Yet again, the volume is low, man. But if I look at the fact that it took out 9,000 positions from the short side, I mean, if you have a pendulum, for example, that swings right to left, or you have a scale, let's use your scale, for example. If you had 55,000 on one end of the scale and 48,000 on the other end, and then you take out 9,000, so before it's not even 55,000 they had because you have to plus 55 right here plus the 9 right here. So which will give you 64. So let's say they're at roughly about 64,000 before. And then these guys at about, let's still say 48,000, right? You took out 9,000. So it's still in your favor, but you might get a little bit of boost to the upside. So we can check the DGI seasonality, see maybe there's an alignment. It's quite late for me here, and I'm not gonna lie, I'm quite tired. So um, if I sound different, just bear with me. Okay. So DGI is looking a little bit long, right? But when we look at this aspect, if I zoom in right here, we're around this period, right? It's just a consolidation error as well. So because of that, I wouldn't even touch this neither. So DGI for me is the boss. An interesting one I was looking at just earlier was corn, right? Corn added 27,000 new positions to the short side. Now we don't have the seasonality of corn, but if you look at corn, you see corn is dropping. Yeah. So if we have the seasonality and we can determine this is the beginning of a major drop, for example, then we can drop. We can take that asset and go short. Right? So let's look into looked into all that. Yeah. So let's see gold. No, yeah, I mean, for guys that are looking into FX, I mean, there might be an alignment on FX, nothing on pounds. AUD looks a little bit long, right? And if you go seasonality, I mean, I've been staying away from Forex mainly recently because, as I said, I got more busy and I needed something a lot more stable so I can sit about with it 24/7. So if we look at the Aussie, long, big. So yeah, this is saying short. This is telling you should go short. Why that's telling you to go long. You understand? So it's not really aligned for the Aussie at the moment. Um, yeah, the other assets you can look at. I mean, guys, there's tons of assets right here that you can go into. Some of them we don't have the seasonality on them. We'll be investing in them soon. Maybe getting a few of these cocoa, cotton, palladium and all of that stuff. We'll get a bunch of them in there. We'll look for more stable assets. But for guys that don't know much what's going on is this. If you trade FX normally, right, you're dealing with assets that are not as stable as indices, for example. Indices as, for example, if I went into this index a year ago, I'll be up 19%. Now, if you're trading FX, majority of the guys that are trading FX don't have a lot of liquidity. So you might probably have $1,000 on your hands, or let's even say the average person has $100, right? If you put $100 somewhere and then in a year you get $119, you'll be pissed off, right? Like, what's this, right? No, but if you had 100 million somewhere, and then at the end of the year you had 119 million, I'm gonna be smiling, right? So volume speaks a lot when it comes to assets. So the asset like this, because they tend to go up for a very long period of time, you don't need to do much. You just have to look for entries, and you just want to avoid anytime they have a major drops or drops like this. Drops like this, you want to avoid that. Majority of the time, it's going long. So even if you get in here, here, long, long, these are daily scales. Understand? So if I zoom out, for example, zoom out a little bit. So you can see this asset specifically moves. I can't zoom more than that, but specifically moves long. And let's look at another one, for example. Look at another one that like yeah, goes long most of the time. So all you're just trying to do is avoiding the major drops and focusing on the longs, or maybe even piggyback on some of the drops. So you want an asset that's more stable like this compared to FX that has 1% or -1%. Let's go FX for example. No, Euro US dollar has in a year, man. If you invested in this, you'll have lost 0.58%. So you can see, and you can even see some of the lines I use on the FX as well. Understand? I only go into FX when the opportunity looks very nice now. Understand? And I use the EA most of the time, so it is what it is. So guys, that's all I have for you today. There's so many other assets that's possibly aligned at the moment. I mean, there's a bunch right here, so you can use that. If you want to know more and learn more, check out the link in the description and go to the website. You can get a membership to access all of this too. All right, stay care, guys, and catch you. Have a lovely trading week ahead, and stay blessed. God bless you all. Peace to you all. Inshallah.